Welcome to the Genius Factory. Enjoy the video.
You start by funding your Deriv account and securing it with two-factor authentication. This protects capital and access. Once done, set a fixed risk per trade, 1 to 2% of your balance, and calculate position size. Then open the Volatility Index market and load a 1-minute or 5-minute chart for short-term entries. Make sure to add a 20-period EMA and a 50-period EMA as your immediate trend filters before placing any buy or sell option. You monitor the EMAs and wait for a clear cross. Price above both and RSI above 55 signals a buy, below an RSI under 45 signals a sell. Once confirmed, select a short duration contract, 30 to 60 seconds for scalps or 5-minute digital options for more room. Then size the contract to match your predetermined risk and set expiry to align with momentum. Make sure to plan your exit. A target of 1.5 times your risk and a disciplined stop when momentum fades. You finish trades when your profit target is reached or if the EMAs cross back against you. Never chase a losing move. Once done, log the trade details, entry, size, result, and how you felt so you can refine rules. If you see repeated false signals, stop trading for at least 3 trades and have your position size while you reassess indicator settings. This cooling off step prevents escalation and helps you adjust EMAs, RSI levels, or timeframes based on recent market behavior.
Thanks for watching. If you found this helpful, don't forget to like and subscribe.